Many people out there probably think that debt levels are going to be down from a decade ago, right? I mean, it was a debt-laden crisis. But guess what? If you thought that, you'd probably be wrong. Get this. According to Moody's, total debt outstanding in the United States is actually up a few trillion over the last 10 years, particularly company-issued debt. Now, beginning in 2008, it was just under 13 trillion in corporate debt. It was about 12.7 trillion. Well, the first quarter of this year, guys, that number jumped to $15.1 trillion. And get this, according to Informa Global Markets, corporate debt as a percentage of GDP is back to about 45%. That was the level before the crisis. Now, it fell slightly after the recession, but you can see it's kind of crept its way back up. Not just, by the way, an American phenomenon. Let's don't pick on the good old U.S. of A. Corporate debt in many other countries also rising since the crisis. In fact, here are the countries with some of the biggest changes in their corporate debt to GDP ratio. Oh, the Irish. We love the Irish, but their corporate debt to GDP up 42% since 2008. Singapore up, Canada up, France up. The United States, as we noted, only up 1%, guys, because we're back to where we were. The UK, one of the few that has brought it down. So corporate debt, nobody's saying there's any kind of debt-laden panic, but we talk about debt levels here, and certainly the level of corporate debt, particularly the BBB, the lowest investment grade, are up markedly since the crisis 10 years ago.
But, Brian, I mean, in this case, it's a smart move for companies to have taken out all of this debt when they can get it at next to 0% interest rates. There have been companies that have done these incredibly long bonds, 50-year bonds and things like that. And it was a smart move. Some of the companies didn't even really need to borrow the money. They've got cash sitting around on the balance sheets. They've taken it out at incredibly low rates. So it just, because of the crazy interest rate environment that was spawned by the crisis 10 years ago, it's a smart move. And we've even said countries should do the same.
And we're only up 1% when you look at it as a percentage of GDP, because the whole economy is much bigger. So I don't know whether the 12 and the 15 make sense to, that's like.
Well, that's all debt, Joe. So I guess it was,
Right.
It's basically all the debt versus the corporate debt side. And
Right.
I hear what you're saying, and people say, yeah, interest rates are low. They're kind of giving away money. I get it. And that's why I said nobody is calling for any kind of an imminent, corporate debt issue.
Right.
But let's not forget a couple things, guys. Number one, debt, you got to repay it. I mean, ultimately you got to pay it back. Number two, BBB has gone from 700. That's the lowest investment grade. Okay, that's like, Dad, I brought home a C minus. Mm-hmm. That's just over getting grounded level, or maybe that was just me. 700 billion to 3 trillion in a decade. I mean,
it's worth digging into which companies could withstand it and kind of go through it. I have to admit, I was surprised just to hear that there's more debt now than there was before, because you would have expected we'd unwound that.
Hey, Brian, the other question, of course, is who's ultimately holding the bag, which is to say that when you look at the capital requirements of so many of these banks, it's hard to believe that they're the ones financing all of this debt. And when you look at the crisis of 2008, of course, they were the ones who did it last time. People talk a lot about shadow banking. Do we have a sense of where the debt, who's holding the bag today?
Yes, the bag is not being held by the banks, to your point, and this is the good news part of the story, which is it is not as much the banks as it used to be. Now, here's the bad news part of the story, I guess. Levered loans, CLOs, collateralized loan obligations,
yeah, so it's in a bunch of places that aren't
covenant-light
regulated.
loans. You remember all these terms that we talked about, that probably just kind of get our stomachs churning? Those are all kind of coming back. But you're right, Andrew, it is not being held on the bank's balance sheets as much. There's still about $1 trillion in capital. It's going to come back. That's going to be repatriatized from overseas. Is that a word, repatriatized? It's going to come back from overseas. Much of that may go back to buy back stock or even companies' own debt. So nothing scary right now, guys, but just pointing out that these debt levels are higher. Yeah. And, like if you watch Game of Thrones, the Lannisters pay their debt. You got to pay your debts back. That's the difference between a bond and a stock.
The United States government is not going to pay its debt back, Brian.
What's that?
We owe 21 trillion.
21 trillion.
We're never going to pay that back.
Talking about the real debt load.
We'll pay it back with more debt, but
That's okay. I'll just take out another credit card to pay the other credit card down.
That's what I mean. That's unfortunate.
But at least we're not, hey, guys, at least this
Brian,
time we're not using it to buy solid gold boats and $800,000 condos with an $18,000 a year income.